Well, I guess YouTube's doing their job because we already got some visitors in the chat here. I was hoping that YouTube would pop me a nice kind of longer lasting link for this stream. But since I don't see one, I'm just going to spread the Richard Hart / live YouTube one. I'm going to put it on Telegram. I'm going to tweet it. And then when people click it later, who knows where YouTube will send them. If they were smart, they'd send them to the recording, but we'll see. If you want, you can take over. Doing their job because we got some visitors.
Let's go ahead and start. We start the show with you saying, hello, this is Richard Hart, and then I'll come back to you in about 4 or 5 seconds.
Hello, this is Richard Hart.
And this is Gary Leland, and you're listening to episode 92 of the CryptoCousins podcast. Howdy, 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 Richard. Welcome to the CryptoCousins podcast. Had to give you a Texas howdy there.
Hello. Can you believe I've only been to Texas once? It's a big place. I should go more. Houston.
Well,
it was nice.
Place. That's a big city.
Yeah.
Yeah. Houston's about 6 hours from me. I'm in the Dallas-Fort Worth area.
That's a long distance.
It's a big state. You know, I was telling someone the other day, I drove out to West Texas, and I'd driven about 6-7 hours, and I still was in the state. I was talking to someone from Europe, and I said, in that amount of time, I could have gone to 4 countries.
Right. Yeah, it's true.
Yeah, because she was talking about how she spoke so many languages. I said, well, sure. You got to. I mean, within an 8-hour drive, you've got 5-6 different countries that speak 5-6 different languages.
It's weird. It must have been really hard to get around way back when languages are developing, you know? Because you get, I mean, even Spain has 4 or 5 languages in there. It's not that big of a place.
And then you got Spain, and then Portugal's there too.
Yep.
I mean, so you got, that's a lot of languages in a small area. You know, when you really think about it, it's kind of surprising because, I mean, they've had civilization there like forever. So it's hard to believe that didn't kind of mesh more into one.
Yeah, the only thesis I have is the same reason we're different colors. It's just hard to get around way back when. You know, people be born, live and die within a couple miles of the same spot because transportation was so slow and risky and expensive that people just didn't bother doing it.
Well, using that thesis, now that travel is so easy, in 200 years we will have one language.
I give you an interesting. I got 2 interesting ideas on both of those topics. They're not really crypto, but you know, maybe you have a longer than 30-minute interview. Trust was very, very, very important when we had delays in communication. So if you needed someone to go somewhere and negotiate something on your behalf, he would never be able to call you because phones didn't exist. He had to just do it on its own. And trust was super important. But these days, trust is actually laziness because verification is simple. Oh, you say that you've got a thing? All right, well, send me a live stream of you playing with the thing. Okay, no live stream? Scammer, go away, right? So nowadays, trust hurts relationships more than it helps them because you leave openings for people to become worse people and do bad things. I've lost a lot of friends from giving them an opportunity to steal from me. And had I not given them that opportunity, they would be better people today. So the more trust but verify, which really just means verify, that we get, then the friendlier we'll all be. You know, good contract, good paper makes good friends. If there's holes in the paper and there's holes in the contract, you destroy relationships. It's like not having a prenup. If a woman or a man has $1 million reason to think your jokes aren't funny anymore, you're not going to be funny anymore. So if you align the goals from the start, then your jokes tend to be funnier longer when there's not $1 million reason for them to cease to be, right? So my thesis is that due to increase in communication speeds, it devalued trust to where trust is pretty much harmful now because verification is so cheap. And as far as a global language goes, I fully wish that everyone spoke one language. I'm very partial to English because we do make the best films, the best books, the best science, the best research, the global reserve currency. We have the most words. Most of the new words are in English. So, it's easy to say I wish it were English because I only speak English, but I don't. I also speak Spanish. So, and I prefer English.
Well, I think in France, don't they meet like every year or so and change English words and make up French versions?
Terribly
Because they want to keep
wasteful.
the French language.
Yeah,
So
they're pretty nationalist about that. I mean, Quebec in Canada wants to basically stop being part of Canada rather often to maintain their cultural heritage with their French language, and it's illegal to put up English signs there. Fact check me on that, but I know there's lots of laws regarding non-French signs there.
well, before we get any further, I would give for my listeners, I think many of them tend to listen to more podcasts than watch videos, and you're really big on YouTube, and I want to make sure they know who you are. Could you give us like a short 2-minute, 1-minute
Sure.
bio?
Yeah. Hi, I'm Richard Hart, multimillionaire genius. Been retired since 2003. Started my first business out of my front yard selling car stereo equipment, and then got into search engine optimization, shopping carts, mortgage leads, scaled it up to about 150 people, did 60 million a year in revenue. Margins were pretty good. Internet was just kicking off at that time. That was before you could buy AdWords on Google. Google didn't have an AdWords program. There was no pay-per-click. Just funny because now that's like all of their revenue.
Yeah, I remember those days.
Yep. And I don't think the web has gotten any better, oddly enough. It's more bloated now. So if you want to put up a new website, you've got to use a framework, and the framework is pure bloat just to do animations, and we don't need animations. It's just text and pictures, right? Or in our case, YouTube, it's video. And we don't need all these stupid frameworks like Bootstrap and others to encapsulate pictures and data and make it so that we have this so in the old days, the Bible wasn't printed and you couldn't get your own copy, and you probably didn't know how to read. So you had to go to the priest that would be the middleman between the Bible and you, and it left, all the problems of middlemen. They charge fees, right? And they do things wrong. They introduce risk. And so that's what we have on the internet today, is if you want to launch a website, it's become so complex due to stupid animations that you have to go to these middlemen, these gatekeepers, right? So you either put up a blog on WordPress.com or, put up a page on Facebook or something. But in reality, they're just middlemen. They get in between your pictures and your text and the users that want to see it, right? So WordPress is kind of neat because they basically open sourced their content management system that let everyone with a basic knowledge of computing, put up a nice looking website that works pretty well. And I guess we've got that in retail now with shops like Shopify and others. I have no idea why I'm losing my voice here. I haven't been talking much. Just staying up long, I guess. Long nights.
Well, when you do an interview, it's only like usually 3 hours. So
yeah, I got a lot to say. Like I know a lot about a lot, and it's interesting and cool stuff. So.
When did you first get on the net or start building on the net?
My first website was Internet Marketing Masters. This would have been 2001, 2002, something like that. You can look it up on waybackmachine.com, archive.org. Fact check all these cool things I tell you.
I started back in '96, my first e-commerce, and the thing I used to like about it then was, we didn't have Google and Yahoo was around, but you, like for instance, on InfoSeek. Do you remember InfoSeek?
A little bit before my time. I mean,
yeah, and the thing that was so cool is, okay, you'd have a white background with I had a wallpaper website, one of the first wallpaper websites on the net, and I'd type the word wallpaper in white on the white background 100 times, and I'd be number one. And then I looked the next day and I was number 3, and I go, the hell with it. And I'd added like another 400 times. Yeah. And then I'd be number 1 again when I refreshed the page.
I used to do SEO for a living. I know all that interesting stuff.
I don't even call this SEO. I just call this stupidity that you can manipulate it that easy. But
I could penalize meta tags now.
Huh?
If I were a search engine, I would penalize meta tags. I'd be like, oh, you want to rank for this, which means you're most likely to be lying about it. So it's the worst data I could get. I would penalize you for meta tags now. And I would just use PageRank and what other people were saying about you. But PhDs that are better at it than me are probably already working on it.
Well, I think that would be a better way. Hey, thing I really wanted to get into though was Bitcoin Hex.
All right.
I
Well,
want to
it's
find
not
out.
called, we dropped the Bitcoin out of there because there's no
Okay.
reason. Bitcoin doesn't need free marketing from us.
Okay. So
Bitcoin's a
Hex,
$60 billion project. They can go do their own marketing. They don't need to leech off of my effort.
but it
Just
was
Hex.
Bitcoin Hex originally,
Yep.
right?
Yeah, it was. And it's really, 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 really hard to get a good brandable, pronounceable, not misspellable domain name. It's very hard. So if you look at, and not just domain name, but brand, if you look at the most profitable publicly traded companies in the world, their names have nothing to do with their business. Apple does not sell apples. Amazon does not sell vacations in the Amazon. Alphabet does not have anything to do with the search engine. That's the parent company of Google and all the Google things. eBay, there's no Bay, right? So once you realize that the most successful companies in the world paid dearly, millions and millions and millions of dollars to rebrand, right? So Google wasn't always called Alphabet. They paid dearly to do that pivot to a new name. And, back when pay-per-click was popular, there was a company that did all the pay-per-click for Yahoo, and it was called GoTo, but it was like GOTO. And there was other website called GO2, and it was confusing. So what they do, they rebranded to Overture. Why?
I remember that.
Yep.
Yeah. I used to have a pin from Overture they sent me
Yep.
for doing so much advertising with them.
Yep. They were the first guys to figure out that you could take all of the profit from a customer acquisition away from the retailer and just give it to the search engine. And that's what search engines are today. They take your profit you make on your first customer, or maybe the first few months of total customer value, and they just give it to the search engine. Because people keep bidding against each other until that's the emergent property. Is that the search engine makes, if you do pay-per-click on like mesothelioma lawsuit, it's like $50 a click. It's absurd how much money search engines make by being the filter by which you don't see sites. Because that's what a search engine does. It shows you not sites. Here's all the sites. We're not going to show you all the irrelevant ones. So we get to choose what isn't relevant, right? And it's dangerous because if they frown upon you, your life's over. Like, if you get banned off of Amazon, Reddit, Twitter, Facebook, whatever else, pretty hard for humans to know that you still exist. It's risky. It's very risky. It's not good.
So Hex is the name now. You got a great looking logo. I know that. You're a marketing guy.
Yep.
Obviously.
Can I ask you a question? Are you recording this on your end for audio still?
Yes.
Because I'm getting reports of lag on my end, and I want to stop recording locally and see if it helps.
Oh, that's fine. I'm recording.
It shouldn't
everything.
make any difference, but just in case. Yeah. Good luck, guys. I hope that helps. I don't know why it would lag. I mean, you guys can watch this at 360p. You don't really need to see my wrinkled shirt in higher res.
Let me know when you're ready.
Well, I mean, I'm still streaming. I'm just getting reports on lagginess. They can survive it.
So you ready to go back?
Yeah, we're still live. I never
Okay.
stopped streaming. I just stopped recording locally. So you'll have to use,
No, I was
for
just
audio,
waiting
you'll
for
have to
you
use
to
your
get
side.
that taken care of before I interview Jay and
Yeah.
ask you more
Now,
questions.
you do have audio on your side, right?
Yes. Yes.
Okay. Because I stopped recording on mine. You'll still have
That's
the
fine.
YouTube version of it.
Yeah, I'm fine.
All right.
So, Bitcoin Hex, you're marketing it as the first high-interest CD on the blockchain.
Yep.
I'm correct.
Mhm.
Can you kind of go over that with me
Well, sure.
and explain that to me? Because, like I said, I'm really interested in Bitcoin Hex.
So we want to get rid of middlemen and make the world work better by giving people value, in the case of storing value and transferring value, at lower cost, with higher trust, with lower fees. That's the whole game of crypto. That's what it's all about. And if you look at what crypto is actually being used for, the blocks are empty, they are not full, and the blocks have pitiful throughput. So if we filled the blocks, we'd still be doing almost nothing. since the blocks aren't even full, we're really doing almost nothing. Now, the good news is that because this market is so gigantic and there's so much money involved, that doing almost nothing can still be worth $60 billion or more. We were worth $300 billion at the end of 2017. So when a lot of people confuse my narrative that I issue because it's accurate and nuanced, and they confuse me for being a bear. I'm not a bear. I think that the price can go to new all-time highs like it always has, and you don't have to make a lie or an excuse and pretend that 4 million users is good. You should be excited that you can get to a $300 billion valuation on Bitcoin with less than 4 million real users. You should be very excited about that. That shouldn't be bearish to you. That should be bullish. But you should also be accurate. 4 million users sucks. Clash of Clans has over 100 million a day. Bitcoin's been around for 10 years and has 4 million total. Now you could say, oh, but what about the guys on the exchanges? Bitcoin was designed to get rid of middlemen, not your keys, not your coins. If you're using an exchange, you're the reason that we get these XYZ exchange hacked and X number of millions of dollars lost. Triple-digit millions lost in hack. We keep getting those headlines because people don't use crypto for what it was designed for, which is to get rid of middlemen. If you're not holding your own keys, you're part of the problem, right? So let me unwrap this. Crypto is currently only used for speculation. Why? Well, it's pretty simple. If I want to buy something on, let's say, the world's most popular retailer for English speakers, Amazon, do they accept Bitcoin? No. Why not? Why would they? It would reduce their conversions. What do you mean it would reduce their conversions? Well, there's this thing called the paradox of choice. Every time you add a new payment option to a user, it reduces the likelihood for them to finish checking out. More payout options means less completed sales. That ain't good, right? So what if you did decide to confuse them anyway and have reduced throughput or reduced checkout completion? Then they have to rebuy their crypto. And what happens when they have to rebuy their crypto? They don't have to, by the way. They could just dump it and not get back in. But let's assume a positive feedback loop where crypto is adopted and they get back in. Now they've got to pay the bid-ask spread on the order book or some other type of transaction fee. And if you go to an ATM, they're about 10%. Maybe you get a deal at 6%. You just paid 6% for the privilege of not having chargeback protection, not having an extended warranty, not getting cash back, not being able to do subscription where they just keep pulling every week, right? Not being able to get credit. You have to have the money ahead of time. That's a lot of suck to receive for paying 6 to 10% more. So why would Amazon accept that, right? I was going to tweet yesterday, hey, what was the last big retailer we got on board? But I hate being bearish because the price can go up anyway. So if I tweet something that's accurate, like, hey guys, no one's working on adoption, and then they interpret that as price down, then I'm misleading them to some degree. I don't think enough time has passed where the bottom might be in, maybe 50-50. We're still under very strong resistance here. And we're crossing a 50 to 200 day golden cross very far away from the cross point. So where the averages will cross is, $1,000, $1,200 underneath us. Usually that means that we die. So when we have a golden cross or death cross and the price is very far from that cross average, we tend to revert back to it. And we did this in the last bear market too. We had a 50 to 200 golden cross, dumped 70%. And then we had another golden cross and it dumped 40%. But then that was the last one and it was at $300 and it was just bullish forever, right? Up to 20K pretty much, with the occasional 30-40% dip, which every quarter, I guess we get one every 3 months, I think. So point of the story, crypto is used for speculation. You can dream and fantasy and mindfuck yourself into thinking that it's not, but it is if you measure it. It's being used for speculation. There's tokens that don't even function properly that have high values. That ain't adoption. That's speculation, right? Now, is that a problem? No, it's fine. You know what else is used for speculation? Gold, stock market. You think people are buying stocks because they don't want to make money? You think they're really interested in Coca-Cola? They believe in it. They're like, the world needs more sugary drinks. I'm a dentist and I want to see more cavities. No, they buy everything that's traded in a market because they want to make money. And it's honorable and it's enough. And you should be happy that whatever you have goes up in price. And unless you're robbing people, it's very likely you're making the world a better place. Now, we do have hiccups like, Theranos and Enron and companies that misled people. But if you're not being fraudulent and you're honest with your offering, by and large, investing in finance and new experimentation leads to new products which make the world a better place. So, speculation's enough. The price can go up with few users. 4 million users is still terrible. There's less than 4 million Bitcoin wallets that have $100 in them after 10 years of existence. And that number is pretty much going down. It used to be a little bit higher because I guess people are combining their wallets to save on fees, or maybe the bear market too, or both. What else? So what's a multi-trillion? If the game is to get rid of all the old legacy guys with their crappy systems and their crappy rules and their high margins and their risk, if you want to get rid of those guys, you got to do more than currency, because finance is more than currency. There's multiple trillions of dollars in time deposit saving products in the United States. So the CD, the certificate of deposit, which internationally was more commonly called a time deposit, depending on where you live, has multiple trillions of dollars in it right now, just in the United States, with other countries having trillions of dollars as well. Number 2 would be China. That market of locking up money now to get more money later is unserved by crypto. Unserved, multi-trillion-dollar market. If you have programmable money, the first thing you should program is interest. Right now, in Bitcoin, if you want to make interest in Bitcoin, you got to send thousands of dollars to some foreign country to buy some piece of hardware that mines Bitcoin and makes you slave to an electric company, and makes most of its profit, half of its profit, in the first week you receive it, due to increasing hash rate. That's a shitty system. Now, that shitty system exists in Bitcoin because there's no better way to do it. We need proof of work, because proof of work is the only way to verify what someone said was true. So they do in the animal kingdom. A bird that's got fancy feathers and big chest, well, he's got extra calories. That's how he got that big chest. And he's got extra feathers because he's just burning energy, right? He didn't need that energy to survive. He's got a surplus. Look at his surplus, right? If it was free to vote and vote multiple times, you couldn't trust someone's vote. People have to get one vote. And the only way to ensure someone gets one vote is to make it expensive. And the way that we make it expensive in Bitcoin is to be slaves to the electric company. Now, if you can piggyback on an existing system where people are already paying those miners to be honest and giving them a block reward, then your system piggybacking doesn't need to give them a block reward too. They're happy just with the fee. So in Bitcoin, new Bitcoin is inflation, about 4.18% currently. In the halvening in a year, it will go down by half. Instead of giving that money to miners, who I don't know how many you've talked to. I haven't talked to that many. Apparently don't speak much English and don't have much interest in speaking to you. And we're happy to see a corporate takeover during the SegWit 2X battle, which, unless you're very technical, you may not understand. We give that money to people that hold their coins, that don't dump the price, and the longer you hold, the more you get paid, just like in the real world.
HEX.
With HEX, right. So it's a hybrid. We pay our equivalent block rewards, our inflation in the system, just to people that are holding. And we don't have externalities sucking down the price like power companies and chip manufacturers, because we don't have proof of work for block rewards. The only externalities that we have in this system are we're not paying electric bills, we're paying some fees, and they're very low fees, because in a system where you're designed to hold for a year, 2 years, 5 years, you don't need a lot of throughput for transactions. You have one transaction at the beginning of your 2-year period, 1 year, 30 days, you can lock whatever you want, right? and then you have a transaction at the end. That's very low throughput for very high economic value. So we don't have to pay the miners much to do that.
So you
That
give
makes
that
sense?
money to the people who stake.
Right. And then if you stake, the money that you're being paid always exceeds the inflation rate. Always. So the reason inflation sucks in most currencies is because it's being given to people that's not you. There's a lot of money printing going on in most currencies. In Bitcoin, it's being given to Bitcoin miners. You're not a Bitcoin miner? Oh, well, they're just going to dump on your head to pay their electric bills. And so for 10 years, miners have been dumping on Bitcoin holders' heads to pay electric bills. And it hurts the price. It doesn't help it. The more miners that compete to make the network more secure, which is funny because it's not actually more secure. It just has higher hash rate. You're still completely open to all types of attacks that aren't hash rate based and are more common, right? So we've had inflation bugs that we've narrowly dodged. Someone could have exploited one of those attacks and it has nothing to do with hash rate at all, right? And hash rate does nothing to protect you against those types of bugs. So, you know, the security that having more hash rate offers is not actually that good. It's okay. Yeah, it's better than nothing. But is it worth paying out huge, giant percents of the currency? I guess, because it worked out. But when this other thing works out too, when it has it has a better security model. So like every time people upgrade their network EXEs in Bitcoin, there's settings that they get to decide. How big blocks do I want to accept? What's the minimum fee I'm willing to accept to, make a transaction, let it get into a block? And do I want to keep this halfening thing? It is not written in stone that the miners need to just cut their profit in half in 400 days. Now that's what's scheduled. That's what's likely to happen. That's what I'd like to see happen. But if the miners decided, hey, actually, we're just not going to double click the EXE that has our profit cut in half. We're just going to double click this EXE that keeps our profit the same. And if you want to go make a fork and have a minority hash rate tiny chain with your new little guys that are butthurt and mad because we changed the economics, well, you can start your chain that has low hash rate, and then we'll just attack it every once in a while to show you that hash rate matters. Okay. Well, what are you going to do to stop that? Well, you could do proof of work change. Okay, what are you going to change to? It's not easy, right? So
yeah, any change is not easy with Bitcoin.
Well, by design, So my point is, the inflation bugs that have been dodged. We had one inflation bug that we bit and had to roll the chain back many years ago. Just dodged one, 8-10 months ago.
Right.
A Bcash developer found it with no bug bounty. He was just nice enough to let everyone know. Thanks, bud. That was real nice of you to not just get all the free money. He could have exploited it and just got free money. All right, nice. Thanks, bro. Appreciate the help. Glad that you saved these billion-dollar system at no profit to yourself. Most people would not do that, I don't think, right? People tend to do what's in their best financial interest usually. So that type of inflation bug that we have fallen for and almost fell for again, that doesn't exist in HEX because the game theory is in an immutable smart contract code that you never get to double click an EXE to set some options to change how it's interpreted, right? It's just, there ain't no there's no .conf file that you edit to be like, oh, actually we want to screw up this thing. How do we screw this thing up, right? But that does exist in Bitcoin. So and the substrate that it's on Ethereum has lower fees, higher throughput, actual bounty program where people get paid to find bugs. Bitcoin doesn't have that. So, and no cryptocurrency has ever been audited, the actual chain. There's never been a cryptocurrency that has had a full security audit for its primary blockchain. In the ecosystem that we're using, we can get a security audit, and there already has been a security audit for the base token that we're using and for the modifications that we're doing. There isn't one for the whole Ethereum system still, but it's some security audits is better than no security audits, right? And this is a system that's launched multiple billion-dollar projects. EOS sold $3.2 billion of Ethereum for people that wanted to trade their Ethereum tokens for their EOS tokens were just an ERC20 contract on Ethereum. They sold 7% of all Ethereum tokens by volume. So BNB token, all-time highs, bear market, didn't care, pumping, right? ERC20 token.
Big.
Yep, ERC20 token. TRX, $1 billion plus project, ERC20 token. So that's like $5, $6, $7 billion of value that's been launched on ERC20 token without problems. And then they just switched to their own network anyway. So EOS launched as an ERC20 on Ethereum and then airdropped people that had that token on Ethereum to the next chain, which was the EOS native chain. BNB is doing the same thing on their own kind of federated blockchain. Both of those systems aren't really distributed. They're centralized with fewer nodes. But that's fine. You know, if you have less attackers and you want more throughput and lower fees, okay, you can make that trade-off, right? You can have a little less security for a lot more throughput. And I support people that want to make that decision, right? You should choose what level of security you want to play at. And then, I think Tron did the same thing. I think they airdropped on their own network as well. So, TRX, BNB, EOS, all launched as ERC20s and then pivoted to their own networks. Our system, we don't want to really pivot to another network. There's no advantage for us unless problems appear. And then then we'll pivot to a network, fork it, or do one of the other 5, 6 networks that supports the contract language that we use. So we do store value better. We pay holders instead of miners. We have higher throughput, higher security. It's a new token that you can get for free if you hold Bitcoin at the snapshot date.
When is the snapshot date? Have y'all decided that yet?
It's been like 50 days forever because we ran into 2 bugs. Originally, it was 2 weeks forever. So you have an option, right? When you're building software, you're like, hey, we want to support addresses that start with 3 because there's a lot of people that use SegWit. And there's some exchanges that use SegWit, and we'd like it if they wanted to be able to claim and airdrop their customers this token at a severely reduced rate. They would be reduced by 75%. They'd only have 25% of their stack left because it's in a giant whale wallet, and we have whale penalties. They should be given the option. If you want to be part of the ecosystem and give your customers free stuff and give them a reason to trade on a new pair and do volume and pay fees on your system, that's good for everybody, right? So we wanted to be able to have these 3 addresses, these SegWit pay to script hash addresses claim and pay to witness script hash. It's complicated stuff nobody really needs to know. So that delayed us for a while. And then I start getting my outputs from the theoretical modeling of what users will do with the system. And I notice that the way that it's designed, the guy that gets in the first day makes 1,000x. Oops, I overshot. So all of the game theory was designed to reward people that got in early. And as you tilt so many things to reward the early guy instead of the late guy, eventually the early guy just murders everybody else. So the tilts that we have for the early guy in our system are, if you get in, the first day or first period, you get a 20% speed bonus. If you are referred, you get a 10% bonus. You can refer yourself if you're tricky. You end up with like a 32% bonus.
And just for while we're talking about that, if anyone is interested in checking out HEX, go to CryptoCousins.com/HEX.
There you go.
And that is my referral program.
Use his referral link. You'll get a 10% bonus for doing it. So that all goes to early guys. Those decay. The referral bonus stays static. The speed bonus decays to 0 over 50 weeks. And not just speed, but we have something called We Are All Satoshi, where if you get in early, you get your whole stack. But every week that you don't get in, you're missing 2% of your stack, and it was given to someone else. And there's a big change that I just came up with today on that, which I'm basically explaining to you now. I haven't spoken about it publicly anywhere, just in our Telegram channel. If you want to go see us designing the future of finance, you can go to t.me/hex crypto. And, I'm in there constantly, and 2,500 other people, 2,700 maybe now.
It's a big group.
Yeah, we don't deal with spammers. We don't deal with, if people want to talk smack, we just have a smack talk channel we move them to. don't have much of that anymore because we just have copy paste responses to every argument people have. Ah, it's a Ponzi. Ah, it's money grab. You're like, copy paste. There you go. There you go.
While we're saying that, let's make sure people do understand that when this comes out, when HEX does launch, this is basically free.
Yeah.
You get a certain amount of HEX for every Bitcoin. What is the ratio?
It's 10,000 to
HEX
1 before bonuses, and you'll almost always have bonuses.
So the minimum is 10,000 to 1.
Right.
And you're giving it away, so you're not like taking people's money.
Nope.
And
now,
so
this is the change.
I have a hard time with that when I hear this scam, because I don't know where the scam is since you're not taking anyone's money.
In crypto, anything that someone else doesn't own a piece of is a scam. If someone buys a coin that you didn't buy, it's a scam. Take Ethereum, right? I called out Ethereum on being a scam for a good year, right? And everything I said about it was true on the negative side, but I left out all the positive things. So, for instance, everyone that's using Ethereum's losing millions of dollars, through security bugs. That's true. Okay. Well, why is it true? Because those guys used it wrong. Did Ethereum screw them? Nope, they screwed themselves. Ethereum just gives you a lot more rope because you have more options. It's hard to lose money in Bitcoin. People still do it. Like if you're coding your own wallet in Bitcoin and you don't understand change addresses, if you don't send the leftover money back to yourself, you lose it as a fee to the miner. It's very counterintuitive to new people. So you get in there, you're trying to develop your own Bitcoin wallet, and you make your own custom transaction, and then your change disappears as a fee to the miner, and you're just missing the money now. It's just gone. That's about the biggest mistake you can make in Bitcoin. That's Bitcoin's fault due to its design. Ethereum gives you more rope. You can make more mistakes. You can let someone else destroy your contract using a destroy command because you didn't tell it to be private, not public function. You can use a bad implementation of multisig that someone else built, and then someone destroyed that, and so now no one can get their funds, right? So if you use the parts that have done billions of dollars of commerce and never had a problem, which is what we're doing, we've got billions of dollars of testing that says this stuff works well, very well. If you venture out into La La Land and do a bunch of untested things, then you're more likely to have bugs, right? Or if you don't get a security audit, right? So it's not that Ethereum's evil, and that's the reason that people are losing money. It's because it has more options available to you. And then if you're not careful, your careless ass loses money, right? So when you tell people about crypto, you have to separate utility from price because they don't have anything in common. A lot of scams go up real high. No adoption. People just want to buy. So a project could suck. Like for instance, if you think Ethereum sucks, I can tell you that right now, when Ethereum launched, Bitcoin was at $500. Now Bitcoin's at $5,000. That's 10x. Ethereum is up 540x. So by holding Ethereum instead of Bitcoin from the moment they launched, you're up many, many multiples of x, right? Other tokens have done that same journey upwards in x in shorter time, right? Like EOS. Why? Because the economic energy that it takes to pump a new coin with a low market cap is exponentially less than the amount of energy to pump a large market cap coin. So to move Bitcoin 10%, that's a $6 billion move from 60 billion to 66, right? To pump a new coin 10% could be $20, right? It could be 200, it could be right? So you're never going to see the same returns on Bitcoin or any large cap crypto that you can get on a smaller cap crypto. It's just mathematically not possible. You've got finite amount of new economic energy to input into the system. And if you put it into the big caps, it moves a little. If you put it in small caps, it moves a lot. So in the bull run, I think a lot of people buying garbage are going to get very rich. It makes me angry, but that's how math is.
No, and I see that completely and understand that completely.
Yeah.
I'm not sure if you answered my question though, when you think the snapshot will be.
Well, it keeps, so the story. So we wanted to add So we were on our timer, and then we decided to add 3 addresses, and we paused the timer at 2 weeks. And then I stayed 2 weeks for so long, and I'm like, all right, let's give new, better data. And then I wrote down, this is for this phase, this is how long it takes for this is how long it takes for that. And it was about 50 days. And then we did our modeling and saw that the game theory was broken. I had tilted too many things towards paying the early guy. Now the first guy to get in gets 1,000x, and all he has done is pump the price of Bitcoin, not the price of HEX, because HEX isn't on market. So why should the HEX ecosystem over reward a guy that got in 1 day early and pumped some other coin? That's stupid, right? So then I had to do one of 2 things. Either change the way that early adopters were being rewarded and remove one of the insanely tilted towards early guys things, or overlay another function that rewarded later guys to cancel them out, which is a little more clunky. I think I came up with a really great way to do it, and it was maybe only 12 hours ago. I think it's super simple to do. So don't hold me to this. It's not coded. I think it solves a lot of problems at once, and I'll explain it to you. So we know that we don't want the guy that gets into HEX the first day to make a 1,000x, because it just pumps the Bitcoin price. Doesn't help HEX, right?
Okay.
So that's stupid. So when do you want people's honorable behavior of buying HEX and locking it longer periods of time? When do you want that to kick in? Preferably when it has a value of some sort on an exchange somewhere that people can accurately price the value of the future coins, right? So I think the guys that did it the best were the EOS guys. The EOS guys got the most amount of money in the least amount of time, and their token held its value after ICO in the bear market. And I don't believe in the project at all. It's not real crypto. People vote on whether you get to keep your money or not. They have taken money from users before, which is basically reinventing the default judgment on the blockchain. I like none of those things, right? And the whole premise of the thing, other than we just vote to take users' money away, is that they have high throughput, and we don't need high throughput, right? So blocks are empty, dude. I'm not sure why you care so much about high throughput. So I don't like any of those things. and yet they raised $4 billion of ETH, but if you look at when they sold it, they raised $3.2 billion of ETH that they sold on exchange by selling their tokens over a year with an automated contract where if you send it Ethereum at the end of the day, so there would be a pool of EOS that was going to be given out. Now look, I'm not an expert on this. This is new information relatively. At the end of the day, they're going to give out X% of the EOS, right? And whoever puts in Ethereum that day is going to get their share of that day. And so basically it's a daily conversion where people just turn their F into EOS. Now that phase is over with. They did it for a year and you can't do it anymore. So what I liked about that system was we've got in HEX, when you claim your coins, no one gets them but you. There's all these leftover coins that aren't claimed because maybe the guy that had them died, perhaps like Satoshi. Maybe my marketing isn't strong enough in the Asian areas to reach every holder that speaks a language that's not English. Maybe it takes time for ideas to spread, or for people to figure out that free money is awesome, right? So it's very unlikely, and we also have technical considerations. If you have a multi-sig address, you can't claim, because technically it's not possible in a trustless way. So because of all those factors and the whale penalties, only about 11.4 million Bitcoin net after whale penalty and
before we go on, what's the whale penalty? Because my listeners probably don't know.
Well, I don't think they've got 1,000 Bitcoin in a single wallet to really be bothered by it, because that's when it kicks in. But if you do have 1,000 Bitcoin in a wallet, you're going to lose half your stack. If you have 10,000 Bitcoin in a wallet, you're going to lose 75% of your stack.
So that's
And
the
it
penalty.
scales
That's the whale
linearly.
penalty.
Yeah, that's the whale penalty. And basically what that is, why do I want to give free money to some whale that just wants to dump it on the heads of the believers? Numerous cryptocurrencies have made this mistake and paid dearly for it. Bitcoin Cash was a fork of Bitcoin that gave 180,000 Bitcoin Cash to the Mt. Gox trustee who sold it on market. He sold 30,000 coins of it. Why was giving free money to the Mt. Gox trustee smart? It wasn't smart, because he ain't going to buy none. He's just going to dump on your head, and that's what he did, right?
And
So
you're
in our
discovering
system,
that.
yeah, so we don't allow Mt. Gox trustee to claim. He doesn't need free money from us. He's got 160,000 Bitcoin and 160,000 Bitcoin Cash, and I'm sure there's lots of other forks he could claim if he wanted to as well. Go have fun with that, buddy. You don't deserve any equity in our system. You weren't in the chat room helping us choose percentages. You weren't spreading the good word with a referral link. Why do you need free money? Get lost, right? So what we do is we get rid of all the freeloaders, the useless guys that weren't there when they could have had utility. 2% every week, and we just keep cutting them down. And so the speed bonus keeps getting lower. Their stack keeps getting disappeared and redistributed. And the way we used to redistribute those guys that didn't claim, like probably Satoshi and all the people that couldn't technically claim, and huge exchanges, right, that have multi-sig wallets that can't claim. So the only two big wallets that I've seen that can claim because they're not multi-sig are one of the Bittrex wallets and one of Binance's wallets. I don't know, it's maybe 700,000 coins or something. It's a lot. But all the other exchanges, their wallets are mostly multi-sig, so they can't claim.
So there's going to be a lot of coins to distribute.
Right. Now, the original system was that we would give those coins to the people that staked, and if you stake longer, you get paid more, and it introduced two problems. First problem was day one guy getting 1,000x, day two guy getting a 500x, and day three guy getting a 250x. Do you really deserve 1,000x for being a day earlier than somebody else? Nope, you do not, right? This whole system is about getting a thing that is the first blockchain version of something that's a multi-trillion-dollar market in the real world, the CD, the time deposit. Time deposits are based on, there's a ratchet where they pay you more if you have over 100K, it becomes jumbo. And there's a ratchet where they pay you more for longer. They pay you about 20% more interest. So if you were getting 1% interest, you'll get 1.2%. You get 20% more interest every extra year. And it asymptotes at about 20% extra. 22.7 was the last math I did. So if you stake 1 year in a normal CD, maybe you get 1%. And if you stake 2 years, you get 1.2. And if you stake 3 years, you get 1.4. And if you get the idea, right? You keep getting 20% more until it asymptotes, because it just can't reasonably pay you anymore. Asymptote just means like it keeps getting closer to a number, but it never touches it. So that's perfect, because we already know that trillions of dollars of human decision making was totally fine with locking up longer for this much extra percent. So we already know that works for trillions of dollars. So I really like that shape of distribution and curve and bonus system, right? So we copied that roughly with the 20% more shares of the staker pool for every extra year that you stake. And the problem we ran into was, because the returns are so much higher during the claim phase, because we're handing out those unclaimed coins, that people could cheat the system by taking a shorter stake and just recompounding it outside the system. And if you did that every 2 weeks, it outperformed just staking longer. So now a guy that just kept opening and closing 2-week stakes was outperforming an honest guy that staked for longer and should have outperformed him. And to cancel out that compounding advantage, it's very hard. It's very convoluted, right? So we're like, okay, well now we have to internally compound everyone, whether they wanted to or not, and update all these fields. And then we're like, okay, what's another way to do it? Oh, we use a price nav model system, and that, like, it's so hard to try and back that out that at some point you're just like, all right, why don't we just not have this front loading problem in the first place? And then we don't have to worry about inventing some other inflation thing to cancel out that inflation thing. And so the solution was, instead of letting the first guy in make 1,000x, which only pumps BTC, we'll do what EOS did because it worked, right? And this is just my guesstimate of what they did. You want to turn your Ethereum coins into HEX? Cool. Send them to this address. Once a day at the end of the day, it's going to print the same number of HEX, whatever the ones that weren't given out, it's going to print that percent of those that were not given out, that weren't claimed, and people can convert them, right? So you send in Ethereum or wrapped Ethereum, which is basically ERC20 encapsulated Ethereum, and then at the end of the day, you get HEX out. Now what we have is there's no like getting more for getting more for getting more for getting more. Oh, you got in first day, you get infinite. Oh, and then you staked it, you get more. Oh, and then you staked it, you get more, right? That whole runaway compounding thing, we don't have that problem anymore. And another solution that I'm pretty sure we're going to implement is, instead of paying you 20% longer, we're going to pay you maybe 10% longer, but let that compound. So for your first year, maybe you'll get 10% more, but then for your next year, you'll get 22. And for your next year, you'll get 34. And for your next year, you'll get 56. And then that mirrors what people would try and be doing by cheating the system with shorter stakes and compounding externally. So we pre-compound people's interests off the bat, which reduces the load on the system, makes it so that longer pays better, and is, to the best math that we can do, approximates the increase in interest that you get in the normal legacy CD system. So the changes basically are, instead of 20% flat per year, it becomes exponential. So a little bit less in the beginning, a little bit more later. And instead of people just getting free HEX that was unclaimed and then staking it and getting more, and then staking it and getting more, and then eventually the new guy that wants to market buy on exchange and make a good return is just so vastly outgunned by all the early guys that it's harder to onboard new users because his effective interest rate's too low, right? Because the stupid 1,000x first day guy. So I think that using the same system that worked for EOS will work very well here. Because any other thing that involves just giving more free coins to the guys that got free coins in the first place, it's just a rich get richer kind of thing. And then they don't even have to buy the coins because they're already satisfied with how many they got. And then what can they do if they're not going to buy more? They can just sell. Well, that's not what we're trying to do here, right? So I'm pretty excited about this new system. I do need to check over some things, right? Like, do we do it daily, weekly, monthly? Do we support wrapped ETH? Is it just ETH? Can we distribute this? Like, can this claim contract be hosted by numerous people? And like, there's certain little questions there. I think it solves the front load. I think it solves the external compounding. And I think it solves some onboarding. So I'm pretty excited about it. And then the other thing is, like, if more people claim, then there's less available to be converted. And then effectively, if the demand is the same, then the conversion price should go up. And I see like a positive reinforcement there. And we know it works because it worked really well for a shitty project. A shitty project, it worked really, 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 really well for them.
So it should work good for a decent project.
Right. I mean, I was thinking of maybe tilting it so that we increase the amount released later. But in effect, if you're looking at the like, it works so well that I'm not sure I want to touch it and then have to worry about overshooting and backing off later and all that. I would like to get to market now.
Okay. Before we go to the next question, I do want to make an announcement for my conference I'm doing in August in Dallas. If anyone is interested, I host a conference called BitBlock Boom, and it's a Bitcoin conference. You know, Richard, I went to a lot of Bitcoin conferences in the last 2 years where they really didn't talk about Bitcoin at all. I mean, I went to one that they didn't even have a speaker about Bitcoin. So I decided to have a Bitcoin conference and go after that niche because I think there are a lot of people who are interested in that. So if anyone's interested in looking at my conference, go to bitblockboom.com. The conference is scheduled the 17th and 18th. Like I said, it's in Dallas, Texas. And if you use the code COUSINS, COUSINS, you'll receive 30% off the price of your ticket. So check out bitblockboom.com. Hey, I do have a question with HEX. I have a Treasure, for instance. A lot of people have Treasure. Some people have other wallets. I know you have to go into your wallet and add, I guess, basically an address or something in there for people to get their free HEX. I'm not sure how that works.
Sure. So good Bitcoin wallets have a function called sign message, verify message. And what that means is that the same keys that you use to prove that you own an address to spend from it are the same keys that you could use to sign messages that don't spend money, but just say, yo, look, this is really mine. I could spend from it if I wanted to, but instead, I just want to send you a message to prove it's really mine, right? So for us to distribute these free tokens to people, we distribute them to people that hold Bitcoin at the snapshot height, which hopefully 50 days, but we'll see, right? We've got a lot of progress, and we keep making progress faster and faster because, once you've solved a thing, it's easy to play with your solution. It's very hard to solve it in the first place. So now we're just playing with solutions. It's a lot easier now for us to make progress. So you would just sign a message that says, claim HEX 2, and then your Ethereum address. Now, is there risk in signing messages? Only if you sign a really, really weird one. Apparently there's some way to make some really long thing that's actually a Bitcoin transaction, and then if you sign that, you send your coins away. But if you're signing something that's short that you understand, there's absolutely no risk. That's what it was designed to do, right? So as long as you don't sign an obfuscated, long as hell Bitcoin transaction, you're fine, right?
Okay.
If you weren't fine, this wouldn't be a feature in Bitcoin Core, Electrum, Koinomi,
Right.
all the good wallets that wouldn't have it as a feature. And you'd hear reports of people getting screwed. I've never actually heard a report of anyone losing money like that. I think it may just be a theoretical. And so you will just sign something. You go to, claim.hex.win. And then you just, put your Bitcoin address in there. You can do it over Tor, so you're totally anonymous, or VPN or whatever. I don't care what your IP is. I'd rather not know. And then you copy paste the signature into your wallet. You sign from whatever address you want to be signing from that's got your balance in it. You got to do one